All right, U.S. markets still taking a hit this morning. The Dow fell over 1,100 points to start the day, came back a bit. Now it's falling again. Semiconductor stocks like Nvidia and Intel have dipped over 7% this morning. Overseas, Japan's market had it worse. It was one of its worst days in history, dropping over 12%. So let's continue to dig into the markets with CBS News contributor J.D. Durkin. He is back with me now to talk more about this sell-off. One of the things that is always interesting to note, J.D., as you know, is when retail investors, so not the big money, not the institutional investors, when they see market gyrations like this, they get very, very nervous. And oftentimes they call their advisors wondering what they should do. But the reality is when the market is like this, it is next to impossible to try and time what you should do. And so the smart money, the people like you, smart analysts, tell retail investors to do what?
Well, first of all, as we talked about at the top of the hour here, Vlad, don't panic, because that's what economic advisors have been telling me. And I think that's largely what hedge fund and portfolio managers will be saying to their clients. You know, even before this recent bout of selling, and we can't forget, this isn't just a Monday phenomenon. This really started on Thursday. And I think the average news consumer maybe started to pay a little bit more attention to it into the close on Friday. But the markets have been selling off and on over the course of the last few weeks in a very rotational way, meaning we've moved away from the big tech, the big splashy growth stocks, and we've moved into real estate stocks. We've moved into utility stocks. We've moved into small cap stocks that are not household names, but that rotation overall has been healthy. Obviously, this will underscore a lot of concerns, but the fact is, I just look back at where the S&P 500 was trading, Vlad, in June and July. We were firmly in overbought territory. We look at something called the RSI, the Relative Strength Index. That tells us that the money overall for the S&P 500 was a lot higher. The value of it was a lot higher versus where the market thinks it should have been trading. I think most people I talk with today say this was a bit overdue, and it's expected to be a bit choppier before things smooth out.
Yeah, and let's just talk about the risks that are out there, J.D. We've got political risk. There's uncertainty about this presidential election here in the United States. We've got global security risks. We just did a report with our correspondent in Lebanon about fears of a wider war between Israel and perhaps Iran and certainly Hezbollah in Lebanon. So there's fears over that. The Russia-Ukraine situation, that war has not gone away yet. And then, of course, we've got the interest rate environment that we're looking at in the United States, where some are suggesting that the Fed did not move or has not moved fast enough with regards to its interest rate movements. Do you expect over the next couple of months that the Fed will have to accelerate or increase the basis points that they increase interest rates by, lower rates by, or do we expect that they will continue at the same pace that they have over the last couple of months?
I expect, despite the deafening chorus of criticism against Jerome Powell and the Fed, which is undoubtedly dominating the conversation, I expect Chairman Powell to maintain the consistency that he has been saying for the last 2 years. Every time Jerome Powell, the chairman of the central bank, has spoken publicly, he says something along the lines of, the historical record strongly argues against prematurely loosening policy, monetary policy, and we will stay the course until the job is done. This is a chairman of the central bank, Vlad, who is very aware of the fact that Fed chairmen before him have made this mistake. They have rapidly cut interest rates and allowed inflation to get away. I think despite the criticism, he's still looking at where inflation is at 2.6% according to core PCE. And I don't expect any emergency rate cuts, despite many people on Wall Street who might like to see him do that in the coming days.
All right, J.D. Durkin, as always, my friend, thank you very much. Appreciate it.